C3.ai has been on a downtrend since the 24th of July of this year, 2025, and it's down a further 13.47%. This is Monday, the 11th of July. Yeah, lower prices are expected to remain in place at least up till a few hours before the market opens for today's trading session. Then after that, we might see a pivot, but ultimately it's a consolidation of the recent weakness, the recent plunge. This plunge happened in the post-market session of Friday, the 8th of, um, of August. So it's a consolidation of that plunge that is expected to keep laying out with a bias to the upside. Um, yeah, with a bias to the upside, especially from Wednesday, the 13th. Let's see now. In terms of projections, current price is 19.15. So we have currently we have downward projections and on some upper projections: 12.04 downward projection, 13.74, 16.51. And then upper projections we have 24.12, 24.86, 25.39 currently in play. And indeed there were higher projections, but not in play at the moment, still relevant if the uptrend resumes and it begins to take out previous highs. So we have 28.69, we have 29.81, 30.49. There's absolutely no guarantee that it's going to retest such highs. So we have, in terms of its buying pressure, what do we have? So in terms of its price pressure momentum, we have it's in a severe, there's a severe selling pressure in effect. No end in sight at the moment. No end in sight at the moment. So we'll see how things go. So let's see now what the readout says about the company.
C3.ai is in the spotlight as investors weigh a tug of war between caution over revenue trends and optimism for a breakout year ahead. Community discussions reflect this mixed sentiment. Some see an AI leader at an inflection point, while others worry about competitive pressures and the pace of customer adoption. Speculation is also building around a potential acquisition and how the appointment of a new CEO could shape the company's next chapter. From a fundamental standpoint, C3.ai closed fiscal 2025 on a high note. The company reported Q4 revenues of $108.7 million, up 26% year over year and above consensus estimates, with 96% of sales coming from subscription and prioritized engineering services, a strong indicator of recurring revenue stability. Notably, generative AI revenues more than doubled in the year, driven by 66 production deployments across 16 industries, spanning pharmaceutical giants like Bristol-Myers Squibb, industrial leaders like Dow, and mission critical federal clients such as the U.S. Navy. One standout deployment, the USC Show Off Foundation project, demonstrates C3.ai's impact beyond the balance sheet, saving an estimated $33 million dollars and cutting archival processing time by 10 years, a vivid example of how its AI platforms can deliver both economic and societal value. C3.ai differentiates itself from many AI peers by focusing on turnkey enterprise applications rather than infrastructure or raw model development. Its portfolio covers over 130 pre built AI solutions for predictive maintenance, supply chain optimization, fraud detection, and operational decision making. This breadth is amplified by a partner first go to market model, anchored by deep integrations with Microsoft, AWS, Google Cloud, and new alliances with PwC and McKinsey Quantum Black, relationships that expand reach, credibility, and speed to adoption. The company's federal sector traction is also accelerating, with the expanded $450 million U.S. Air Force Panda program serving as both a recurring revenue driver and a strategic moat in a sensitive, high barrier to entry market. Looking ahead, management projects fiscal 2026 revenue between $447.5 million and $484.5 million, with free cash flow expected to turn positive by Q4 FY 2026. With 95% of FY 2025 bookings tied directly to AI applications and a $742.7 million cash reserve, C3.ai has the financial and operational runway to press its advantage. Risks remain. Macro headwinds, geopolitical volatility, and intense competition from hyperscalers and niche AI startups could all weigh on results. Still, if C3.ai executes on its generative AI and agentic AI growth strategy, fiscal 2026 could mark a pivotal shift from scale up mode to profitability, potentially unlocking substantial shareholder value in the process.